Video we will be going over through US 30 on 9th of December. So basically what I did after previous ranging days on Euro USD, I switched my trading pairs to US 30 and the pound USD. So I took one trade on Euro USD and it was a 5 hour, and the rest of it hit my break even. So I will show my trades that I took on on US 30. So this was our Asian session highs, right? And this was some sort of relative equal highs as well. So we were looking for these sweeps of the Asian highs during the London kill zone, and we had this swept by this upside momentum, and after this swept we had this market structure shift, and with this market structure shift we have this fair value gap, right? So if you were to take entry from here, if you let me zoom in, you see this was our fair value gap, and this candle gets inside the fair value gap. So this wasn't valid because the market structure shift happens over here, right? So this is not the valid one. So what you would do is to refine your fair value gap above the candle. So now this is your entry. Now what I did was I entered somewhere 52.40. This was my entry, and my stop loss was now for you guys, you are new to US 30, so your stop loss would be above the highs or the lows, right? So what I did was my stop loss was let me see, was 70. So my stop loss was the 70, not 70. So what I did was I took my first partial at 6 hour. Where's it? Somewhere here. Okay, so why did I took it on 6 hour? Because I was away from my charts. So when I get back to my chart, the price 6 hour. So the first thing I did was to break even the trade and take off 60% of one trade. So after this, my next target was the 10 hour, and this was the 10 hour. Okay, and I closed my trade on the 10 hour. Now the reason for this was I was busy and I could not manage the trade till the Asian session lows. So after this 10 hour, you could have closed total 80% of your trade, and the rest of your trade would be for this as your target, the Asian lows. But price gets to somewhere 16%, 16 hour, and then reversed. So I will show you mine. This was the 10 hour. Okay, and after this, when I get back, I was looking for the London kill zone to close, and I swept below the London kill zone and then towards the London highs. So why was I looking for that? Because we have the previous day's highs over here, right? So I was expecting for the price to clear this, didn't drop, to clear this Asian lows and uh, any build up that was left over at this point. So that did not happen, and this was not the entry according to our plan. But yeah, I took it, so I will share it. This was the market structure shirt, and this was the fair value gap. So I took my entry with a 6 size lot. I usually do 12 or 18, so I risk like, let's say 0.50. So my target was a London kill zone highs. So this was the 10, although I took my 5% as well from here, and the 10% and the rest of the trade hit my full take profit at the London kill zone highs. So after this London kill zone highs, once we swept these highs, I was looking for a short. This short entry would have been like with 0.30 or 0.50% of my risk, because you know the reason. This previous day's highs needed to be swept, and then we should be looking for our, like, the major cells, like the swing cells. So this is why what I was anticipating, and price did not exactly tax the fair value gap, although it had this market structure shift as well, right? So what I was waiting for is to tag it, and I could have like the 5 hour entry from here as well, because I am in so to risk like 0.25 or 0.50 this entry wasn't a problem for me at this point, because I was in profits already. So it was tagged after like 1 hour and 20 minutes. So there was a misunderstanding in the group that if you have a fair value gap, right, and you have a market structure, you need a immediate reaction to that fair value gap and then the entry. Now if you have any entry like this is your fun, right? If you have entry like this is your entry with lowered of your risk, like 0.50. So although I was already risking half my percent, because I was anticipating this previous day's highs to be taken out. So what happened was I took my entry on the fair value gap and above this candle, actually somewhere, let me see, 56.80. This was my entry, 56.80. okay, so why? Because this was the volume imbalance, so I was expecting the price to fill it as well. So that did not happen over here, and price like moved almost 2 hour. Yes, it moved 2 hour and then it hit my stop loss, and my bias was still the to clear the London lows and the Asian session lows. Once we cleared this previous day's highs, I was looking for shorts, and this is where the news came in, the PPI, and this was the market structure shift. Now if you have a situation like this, when you have a complete selling pressure or the buying pressure, right, what you would do is you want to take your Fibonacci tool from the highs to from the bottom to the bottom, and your entry should be above this. Let me share my Fib setting: 0, 0.5, 0.791, 1, and 0.708. Now if you have like a complete situation where all of the candles are in one direction, your entry should be above this OTE, optimal entry point. Now if you have two fair value gaps, one is this and the second one is this was smaller one, but this one had have like more confluence. Why? Because if you drag it to the left side of the charts, you have a breaker block inside of it as well, right? Because this was the breaker block. Now it also tagged in on my MT4 on this. Let bull US30. So I took my trade on the breaker block and my stop loss was above this highs, and there were multiple reasons for my stop loss to be above. So you could have done this above this fair value gap candle, because one of the reason was because we have news. Yes, one of the reason was because we have news, and the second reason was because we have two fair value gaps at the same point. So I was not risking much as well on this trade. So I had like, where's the level? Actually the levels one in inside this skill zone. So this was my entry. My first target was the 5 hour, but this was on news, so I couldn't close it. So my take profit was the London session lows. So it hit all this my all my whole trade was closed on this London session lows. Although if this move was not immediate, so I could have like taken 70% off here, and my rest trade target would have been this Asian session lows. So this was 11 hour as well. So we had 11, we had -1, let's say this is 10, we had the 13, we have the 10 again. So if you were to hold this trade, this went for 34%. So this was the valid one. So let me go over how I took it. Now after this, all of these moves, we cleared this the previous day's New York session lows. We cleared the previous day's lows as well, right? So this is the indicator. I will share it once again. You can take screenshots and see. GMT -5. Do remember, you need to have GMT -5 over here and GMT -5 over here as well. The 19 to 0 is Asian session, the 2 to 5 is the London kill zone, the 7 to 11 is, although it is 10, but I have expanded it to 11. The 7 to 11 is New York session, and if you want a session to be shown on the previous days level, you need to click this history as well. So you need to custom add this like this, show custom level PDH, and that would be your previous day's highs. And if you go to label high, okay, and the second one would be the not the timing as well. The second one would be the PDL, previous day's lows, and that would be the low. And the third one would be the 830, and that would be the open. And the fourth one would be the MOP, midnight opening price, that is 00. So once we clear this previous day's lows, my expectations was to the price to clear London kill zone highs or to this 830 line. So I told you guys in one of the previous video, if you have these major moves towards any direction, price will always rebalance to like 0, at least to the 0.50 level of this move. So in this scenario, how could you have entered? Now this was the fair value gap, but this is not a BPR, and we don't have a market structure shift, so this was not the value trade. But if you look closely, you have this fair value gap, you have this market structure shift, and now watch this. You have this fair value gap, and these candles were immediately tagged into this fair value gap without breaking the structure, right? This was in our market structure shift, this was the highs. So what we could do now is to refine it and drag it towards the right side. Now if you were to take your entry, this would have been your stop loss, but if you see, this is very unrealistic stop loss. And if you have seen US30 or SPX or any indices on your brokers, you would have like wide as spreads as well. So the realistic stop loss would have been below this wick, uh, my bad, below this body of the previous candle, as I said in some of my previous videos. So what happened is partials would have been the 5R. Here's the 5R, right? So the partials would have been the 5R, and the rest of my trades target would be in NY session highs. And although I guess it would have fit me on break even, no. So this was the fair value gap that it tagged into, and it is now dropping. So this is how you could have like taken your 5R over here, 11R, actually 10R include the 13% and the 10% in one day on US30. So I will suggest you guys to first to backtest US30 and then trade accounts as well. So basically this is it for the day, and let me show you one thing. The guy Puth, I guess this is what his name is. I'm sorry if I am pronouncing it wrongly. So this is your entry, like you have the previous day's high, you have the session highs, and this is your entry. Now your all of the like sell side liquidity left is below the London kill zone lows and the Asian lows, right? So but if you are a trader, this is your buy entry, right? Just forget this, all of this. Let me, I can't even delete it. So if you are a smart money trader, you would have your buy entry over here and over here, because these are your valid order blocks, right? So these are, if you see any order blocks against your trade, and only if your trade is valid, like if it took previous day's highs, Asian highs, the London kill zone highs, and you are targeting the sell side liquidity, and if you have any order blocks inside this is your traps, because you won't be buying over here, you won't be buying over here, you are not buying over here because your target is the session lows, right? So all of these order blocks are your smart money traps, and this is similar for the buying situations as well. Thank you.